Hello, listeners, and welcome to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Rob and I are back at it for our weekly chat. We've been combing through the data from the surveys, and so we're changing up the content a little bit based on some of the feedback. I wanted to take a step back this week and not focus so much on what's going on day to day in markets and geopolitics, mostly because the world's given us a reprieve for the first time in months. But we took a step back and really talked about how we use geopolitics on an investment basis and specifically on a country basis. So countries, how we use geopolitics to pick the countries that are going to do well and also avoid the countries that are going to do badly. So it's one of those podcasts sort of thinking about thinking, if you will, or giving you some example of the way that we use analysis and the things that we talk about to actually implement strategies for clients. So I hope you enjoy a little bit of the change of pace. Cousin Marco is coming on Monday by popular request. You all want to hear from him. He and I actually had a lot of disagreements that we're going to go into on Monday, so you'll see that then. Otherwise, listeners, if you want to talk more about what we do at CI, if you're interested in talking about our wealth management services, if you want to know what our investment minimums are, if you want to know more about working with us, please email me at jacob@cognitive.investments. Also, if you want to know more about the research services that we provide or the consulting services that we provide, you can also email me at jacob@cognitive.investments. A lot of different resources out there if you need or want more of this type of content, this type of thinking, or even this type of investing in your own personal portfolio or life. So without further ado, cheers. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. Well, I'm sort of tearing my hair out here for a funny lead-in for the episode, and I don't really have one. Although I'm looking at my hair in this video right now, Rob, and I'm beginning to think I need to shave it all off again. I've been, at night when I go to pick up the baby, if the baby wakes up in the middle of the night, I can now see the back of my head in the monitor when I'm looking at it the next day, and it's like, it doesn't look right. And I always said I was going to be one of those guys that buzzed it off when it started to. Anyway, look, I'm already way off track. How's it going, Rob?
Well, you're looking at the ghost of Christmas future here, so I remember those days.
Yeah, I'm just hanging on for dear life, but I think maybe it's time not to hang on. I thought we would do something a little bit different for this episode. I thought we'd kind of take a step back and talk a little bit about sort of geopolitics. I mean, we've been really sort of we've been in the weeds for a good reason. I think a lot's been happening in markets and geopolitics, and I don't know if you feel this way, Rob. I sort of feel the last couple of weeks it's been like you get to the end of the week and you take a deep breath, and then Monday hits, and it's like a new, like, it's just like it's been nonstop. And this was the first week where it sort of felt like, okay, like the world is slowing down a little bit. You can feel the European bureaucrats are gearing up for summer. Like those releases are starting to slow down. There's still the Russia-Ukraine war in the ether. But we had our monthly checkup on our strategic wealth strategy. And I thought we would start maybe by just telling the listeners what the strategic wealth strategy is, because I think it's what I want to get to in this episode is how to use geopolitics to think about countries that have opportunities ahead of them in the years ahead and countries that don't have opportunities in the years ahead. Because whether it's been talking with clients or prospective clients or family members over the past couple of weeks, I think everybody thinks the world is going to hell in a handbasket, and it's just not. That's what sells newspapers. That's what generates media headlines. But there are tons of opportunities out there, and there's tons of risks if you kind of know where to look. So hopefully we'll kind of give you some tools to think about that and think about how to use geopolitics to think about what's going on in the world. But maybe, Rob, just tell the listeners straight off, like, what is the strategic wealth strategy and what's the logic behind it?
Sure. Well, I mean, at the end of the day, this podcast is technically supposed to be about geopolitics and investing. And strategic wealth is sort of how we express that. It's the engine that lies underneath everything that we do. So when we build portfolios for our clients, the underlying sort of assumption there is you want to have a global portfolio, that you don't want to just automatically put everything into the US or put the vast majority in the US and then have some, symbolic allocation to some international fund that's probably all, in the UK, which, wow, big diversification, right? But really, I guess the idea is, how do you take geopolitics? How do you take some of these things that we talk about, every day, and actually apply them in a way that makes sense? So I'm hoping that people will be able to come away from this and think about how to apply this in their own portfolios, or get a better sense for what we do for our clients here at CI. But at the very high level, strategic wealth is the notion that you have, think of it as big levers, and we're looking at the whole world and we're pulling on different levers. Not only at the very high level, how much risk do you want to be taking right now? Do you want to be underweight or overweight bonds versus interest rates? How much cash do you want? Those sorts of things. We pull those levers in the very broad sense, but then within that we have the global allocation, and that's looking at every country in the world, including the US, and saying, okay, which do you want to have overexposed, or which do you want to have more of your exposure, and which do you want to be avoiding? Because we see risks, we see problems, we see things that you don't want to have exposure to. And just to round out sort of the lay of the land, that's the very high level view, the geopolitical filter, so to speak, the compass. And then at the bottom, kind of the core of what we're building out for clients is taking that bottom up view and saying, okay, if you want to have exposure to Japan, Brazil, India, whichever these countries are, well, what do you want to own in those countries? And that's where all the bottom up work that we do comes in, all of the innovation based research, and what we call our CI innovation strategy. And that's kind of the core part of the portfolio, where you're saying, within those levers, within that country by country analysis that we do, okay, here's the company that you want to own in the US, because they're harnessing these key innovation trends that we've identified, these revolutionary technologies. And we build a portfolio of those. So you're actively capturing disruptive innovation in a way that's very kind of solid and stable, because you're buying these established companies that are well positioned to do so. But then all of that is at the top dictated by which geographies do you want to be in and not be in. That was much longer than I expected, but that's it in a very large nutshell.
Well, and it's one of the reasons that I love the combination of geopolitics and investing in markets, because if you don't have markets keeping you honest here, like, you can just do armchair talks about different countries all you want. And people do this all the time when they're talking about politics. They think about this country, or they think about politics in that country. And it's very different when you actually have to sit down and say, okay, I'm going to allocate clients' money to X country because of the views that I have. And then, like, it gets very, you really sort of have to have a high confidence view then before you're starting to do those things. And I think you can tell the geopolitical analysts out there whose decisions do impact real world events, whether it's companies moving supply chains or working with investors, and how to actually structure their portfolio versus those that don't. Because a lot of what I see out there right now is that the doom and gloom narrative, it like I said, it sells newspapers, it makes headlines, it does all these other things, but it doesn't actually help you if your goal is, from an investment perspective, to make money, or if your goal from a supply chain perspective is to move your supply chain so that it's secure and you have redundancy and capability. And one of the things that I wanted to get into this week is what the DNA of a country that is going to do well in the current macro environment looks like. Because one of the things that's happened in the last couple of weeks, and we've talked about it on the podcast a little bit, is the Biden White House has said, we want to thaw in relations with China. We think we've gone too far down the Cold War path, and the United States and China should have more productive relations. And you've had some useful meetings between U.S. Trade Rep and China's Commerce Minister, and you've got the Biden White House leaking things about how they want relations to be better. At the same time, you've got this, most listeners probably don't know this, China has basically banned Micron technology from selling its products in the Chinese market. We can talk about why Micron got singled out as the example case, but that's happened. You've also got China refusing a meeting with top U.S. defense officials, which is weird. It used to be that the defense relationship was always more pragmatic, and the economic relationship was where politics got involved. There's an inverse that's happened here in the last couple of weeks, which I haven't quite figured out how to make it work. But anyway, my wind up here is to say, I don't think U.S.-China relations are going to get better. And as I joked last week, the horse is out of the barn door. I don't think Biden's going to be able to corral the horse and put it back into the barn. And the thing is, if U.S.-China relations really are getting worse, and you're starting to see multipolarity and deglobalization, some of these changes, they're really starting to play out in real time. You need to think very seriously about the class of countries that are going to do well here. And I think there's three general classes. And I don't know how to describe these yet, but there's the big countries, the ones that can have their own regional spheres of influence, that have economies of scale, and also that have lots of the raw materials and commodities that they need. So they're not dependent on going places to import a lot of things. Countries like this are Brazil, South Africa, Indonesia. We can talk about what the right makeup is, but that's the sort of DNA of that version. Then there's the sort of countries that have that, but they're not so secure from a resource perspective. So they have to be a little bit more pragmatic about trade relations. There are also countries that are in more geopolitical hotspots. So they can't just say, like South Africa, hey, we're here at the tip of Africa. Like, Russia's not going to bother us. China's not going to bother us. Countries like this are Turkey and India. We've talked a lot about our bullishness about Turkey and our ambivalence about India. They're in geopolitical hotspots. Like, the geopolitical roadmap isn't perfect there, but they have scale, they have human capital, they have some things going for them. And there's that class of country. And then there's the smaller ones around the periphery. And I wish that frontier markets were open for us, because, Venezuela and Cuba and Uzbekistan, like in my dreams, I'm wandering around these countries, like doing investing and things like that. But the countries that fit in the sort of on the periphery or taking advantage of things on the periphery are countries like Poland or Ireland or even Mexico. Mexico kind of splits the difference of some of those, but it's really sort of in that category. And those are the DNA of the three types of countries that we're really looking at, that I think are going to do well. And today in Strategic Wealth, that was why I was pushing, some of these countries that I've been bearish on here in the past. I do think we've reached, it's funny, this U.S. attempt to try and thaw relations with China, in some ways, that's the Rubicon for me. It's like, oh, you've realized that you wrecked the relationship and now you're trying to fix it? Like, no, it's broken. And if U.S.-China relations really are broken and we're not going to go back from that, then it's the DNA of these types of countries that you really want to be exposed to. And there's other issues with it. There's energy transition and tech transition and political contingencies and a whole lot of things. But if you're just at sort of the basic geopolitical level, when we're talking about which country levers we're going to pull, I think it's those sorts of countries that I'm pushing at. And the last thing I'll just say is, like, one of the reasons I think this is so important, to your point, Rob, I think a lot of people, whether it's in your IRA or in your accounts, or if you're a wealthier family, it's in your portfolio, they might think, oh, I'm diversified. I'm holding the emerging markets ETF, or I'm holding this ETF. And the thing is, when you actually pull back the car hood there, I was just looking at this while you were talking, emerging markets, the emerging markets index, it's something like 52% of the companies on that index are in China. So if you're actually trying to benefit from emerging markets, because I think there really is an argument to say they're going to do well in this multipolar environment, if you invest in the emerging markets index, you're not actually doing that. You're actually taking a bet on China. And this is where I think it's really, there's a lot of advantage there for people who are actually thinking about this stuff, because the literacy of what's going on from a global perspective in these countries, and then how that actually informs, portfolio construction, what choices you're making. There, a lot of people talk a lot of stuff about that, but there's not, I think the actual practice and implementation is really lacking.
Do you want to take one of those countries from each of the baskets and speak about it specifically? What do you think is the best way to tackle this?
Well, yeah, maybe we can lead in with Brazil, because I know we were talking about Brazil beforehand, and Brazil is an excellent example of what we're talking about. Because we've been bullish Brazil for a while, and I have to tell you, I was on a Real Vision interview, and I talked about how bullish we are on Brazil, and I got more hate tweets and hate mail off of saying that I was bullish Brazil than just about anything I've said in the last 6 to 8 months. I guess because people have gotten burned by Brazil before. I'm not exactly sure what the reticence is on Brazil. But to your point, there was a bunch of economic data that came out of Brazil this week, and yet the headlines, at least the geopolitical headlines, are, well, Lula said nice things about Maduro, and they signed something in Brasilia. And to the extent that anyone like Bloomberg was actually covering the economic data, it was, oh, the employment data wasn't as good as it was supposed to be. But let's get back to Lula saying crazy shit about Maduro. And what you were looking at was very, very different.
Yeah, and I think just to make a broader point about like why do these opportunities exist? I think part of the problem is there's sort of three different types of people who are participating in markets and who like would have an opinion about Brazil, right? The first type of person is the super specialist. So this is someone who just does Brazil all day long. They've, been to the country 40 times. They worked for the hedge fund. They know, the finance minister by first name. The problem is, and we have this conversation about commodities a lot, is that when you have a level of knowledge that's so deep, your ability to make good judgments is impaired. And, this is an issue with the investment business more generally, because it tends to have this kind of very old school organizational mindset where it says, okay, we're going to have 100 people and we're going to have every person on the node of that tree. They're going to focus on something super, super specific. And then we'll put them all together. And in the end, we'll know a lot and make good judgments. Well, it's actually not the case at all, because when you silo people so much, they all get in their rabbit holes and their judgment stinks. To the extent that it's an old adage that the time to get involved in a market is when those who like it, who know it best, like it least. That's what they say, and I think it reflects that. So that's the first kind. The second kind is sort of the dilettante, maybe reads the Wall Street Journal, but doesn't really do the work. And that's getting to people who are focused on, oh, well, Lula said this thing, like as if that's really relevant because it's in the newspaper, it's in the news cycle. They're not digging underneath. And then the third person is expats. And expats almost inevitably hate what's going on. And there's a big selection bias to that. So I have a lot of Brazilian friends because I'm sort of a Brazil file. I don't know if there's a word for that. I like Brazil. And all of them hated Bolsonaro, hated him. And all of them are very, very negative about Brazil and its direction. But they don't live in Brazil anymore. They've left. And there's a huge selection bias there where the people who we tend to talk with, like Turkey we were talking about earlier today, you mentioned that you don't know anyone who supports Erdogan or is optimistic about his reelection. 52% of the people in the country voted for the guy, and we can't find one person to support him. So there's a huge skew there, and that's why you have those three groups are creating this misperception. So anyway, on Brazil, to get into what we were saying, while the news was completely focused on what Lula was saying and in an international context and sort of the scandal around that, you had three very interesting data points come out this week. The first was the unemployment number. Unemployment went down to 8.5%. The expectations were that it was going to be 8.8%. So for those who don't know, a 0.3% beat on unemployment is a big beat. So that's a huge number in itself relative to where we were a few years ago. Unemployment was over 12%. If you go back 5 years ago, and if you go back to 2021, it was over 15%. So the speed and the pace at which we're seeing the health of the economy improve is extraordinary, but no one's talking about that. So that's number one. Number two was the budget numbers for April happened to come out this week. They were way better than expected and way better year over year. So government debt in Brazil is at 57%, and it's only gone up from 52% in the pre-COVID period. So of all the countries in the world, everyone has seen their deficits blow out, their debt blow out. Brazil is one of the most fiscally sound countries out there. And again, this is just the data. It's looking at the numbers and choosing what you focus your attention on.
Yeah, and this is also a place where when you're focusing on geopolitics, you can you can sort of easily convince yourself that you become an expert on everything. But actually, if you're doing the discipline right, you become very aware of what you're not an expert on. But part of what geopolitics is really good about is finding the center of gravity and learning that thing and then being able to make decisions off of that. So I remember, what was it, a couple months back, we talked about our short soybean position and our long wheat position. And there was somebody who came at us on Twitter who was like, who are these guys who have never done anything in grain trading, who think that they can make some kind of pronouncement about what's going to happen here? And it's where using a geopolitical methodology in Brazil, it was the keep it simple, stupid method. Brazil is going to produce a shit ton of soybeans this year. So much so that when I was talking to farmers, earlier this year in January and February, they were worried about the United States importing soybeans from Brazil, that was a possibility, even though the entire U.S. agricultural complex is not geared towards that. All the reasons that it was not going to happen. And you've begun to see that. And like that position that was short soybeans is actually beginning to play out. And it's just to say that I don't want listeners to think that it's that easy all the time. Like, that took months of research and months of visiting with farmers and months of reading about Brazil and thinking about agriculture and following the drought conditions in the Southern Cone, and went like all of that stuff went into it. But then geopolitics was really able to crystallize the center of gravity there, and on a very small position make that trade. At the larger level, though, I think that's also that you can use geopolitics to find the center of gravity of where Brazil is in a multipolar world. And the thing is, when you go down the list, like, Brazil just has advantages everywhere you look. I know some geopolitical strategists. I'm not doing this to throw shade at him, but Peter Zeihan, who is very well known and who everybody asks me what I think about him all the time, he's been very bearish on Brazil. But he's bearish on Brazil, it seems to me, for it. He almost violates some of his own geopolitical determinism, because geographically, Brazil has so many different advantages. It's far away from Eurasia. It's the only economy of scale in its region. It's really going to become, I think, the major player in South America. And I think that was the other thing that happened this week. Everybody was covering Lula's crazy comments about Maduro. What really happened there was, in Brazil, they brought together 11 leaders across the political spectrum. They had difficult conversations. Some fought with each other. You had Gabriel Boric calling Lula out sort of in person. So did the Uruguayan president. And yet they all signed a joint statement about inclusivity and about greater economic trade integration. And that's Brazil. That's Brazil pushing economic integration. And whether it's Lula's version or Bolsonaro's version, it doesn't really matter. You can just see Brazil organically starting to develop in this direction. And the politics really is just a veneer for what's going on there.
Speaking of keep it simple, stupid, and I think this gets to the clarity of geopolitical analysis, is, one of the problems, because I manage analysts now, that's my main job. So I have to think a lot about what causes people to make bad judgments or good judgments. And I always remember, my mentor, when I first learned, he would always insist, if you couldn't tell the story in about 30 seconds, then it was too complicated of a story.
Yeah.
And really, I still hold to that to this day. And anytime someone has a thesis at CI, they have to be able to just tell you really quick, because if it's something that can be explained so quickly, then it's deep enough and fundamental enough that it really matters. And I think if you look at the academic research that's been done, what it shows is that people who are too into the weeds, there's just information overload. Mm-hmm. They don't know how to weight the value of different pieces of information appropriately. So I used to work with a guy who was a great analyst, but he was so anal and he could never make a decision about anything, because it was always, over here on the one hand, and he would make these columns of like pros and cons. Like, well, here's the pros of this thing, and here's and like, finally we were like, come on, dude, just simplify.
Yeah.
And I think that's part of the issue. And geopolitics is such a great discipline for that, because when I watch the way that you work, like we had our discussion today, and I forget if we were talking about Brazil or we were talking about Indonesia or one of them, and someone challenged the fact that we were going to increase our weight, and I think you gave like a 15-second response. You're like, well, no, it's this, and that was perfect. And that's how the geopolitical thesis should be framed, because it's not it takes, a lifetime of background, but in the end, it needs to be simple.
Well, it's very difficult though. Like the line between confidence and glibness can get very, very blurry. And you also, I mean, speaking of mentors, I mean, I get, for instance, I was annoyed this week because Lavrov came out again and said, "Oh, the Black Sea Grain Initiative is not working for Russia. We're going to think about leaving it when the last extension is up in 2 months." And I threw my pencil down on the ground when I read it because I was like, great, now I have to reanalyze it again. Because even though I think that Russia is not going to leave the Black Sea Grain Initiative because the constraints on Russia haven't changed, the way you get to wrong answers or faulty analysis is if you say, "Oh, well, he said that before, I'm not really going to pay close attention to it." But every time something new happens, like the real discipline is I have to say, okay, I developed all that knowledge. I was really smart. I said that thing before. It's all gone. It's all out the window. We're going to have to start from scratch. We're going to have to see if anything else changed. And that's a very difficult thing to do, especially when you're sort of defending a position in a meeting like that. And it's one of the hardest things in managing analytical teams, or I think in making decisions, because in general, the people who are the most glib or who really lack the most depth are the ones that are willing to make those sorts of pronouncements. And the guys with the columns that go back and forth, or the ones who are quiet because they don't feel as confident or can't say things as much. The thing is, if you can prod those people to get to confidence, but still maintain that analytical and intellectual humility, that's where real knowledge is. But if it's just kind of coming off the cuff, it can be fool's gold. So it's funny you thought that was a good moment, because when I said that, the first thing that went off in my head was, ooh, I might want to go back and do a little bit more work afterwards, because that sounded awfully glib, didn't it, Jacob? But I sort of stuck by it. And I know that's, again, it goes back to that thing about investing in markets keeping you honest, because I did that in my head after I gave the 15-second answer. I was like, well, would I want my money invested this way? Would I stick my guns to this? And the answer was yes. Like the CI macro strategy is like where some of my money is personally. So like when I'm making some of these pronouncements, it really is like, yes, I will put my money there and I will take the risk to it. And it really forces you to be honest about whether you're just saying something because you want to appear confident or because it's your instinct to do so, or whether you do have a deep conviction there. And yeah, it was on Indonesia, but it was also on Turkey. And this is maybe a good segue. We had Emre on the podcast earlier this week. And we talked a little bit about Turkey. And it's I know that I'm analytically in an interesting place because I feel very lonely out here talking about Turkey. And part of this is because of, our relationship over the years. I tell the story all the time about how I came to you and I wanted to impress you. And I told you should short the Turkish lira. And your response was, "This was a great analysis. We're going to go long Turkish equities. Good work, Jacob." And I was sort of sitting there like, oh, okay, I missed something here. But I've taken on the contrarian perspective with Turkey, and it's very similar to what we were just talking about with Brazil. I was very clear, and I built a very clear analytical model going into the Turkish election. What I was afraid of was civil war or civil conflict or a contested election result where one side was going to either have a coup or there was going to be a counter coup. Was Erdogan going to accept the results? Was the opposition going to accept the results? All these other things. And I get that, Turks themselves, especially if you are not somebody who's a fan of Erdogan, it sucks when the politician that you like didn't win, especially when it's, 20, 25 years now of Erdogan in the pole position. I get that must be politically very grating. But when you actually look at what's going on in Turkey, the worst case scenario didn't happen. The CHP, even despite all of and Erdogan has put real pressure on Turkish democracy. I think he's earned the illiberal Democrat label. Like he's definitely in that camp. But this was still a democratic election. Even Emre came on and said, I think the election results were legitimate. Some of the other prospective clients and partners that we've talked to, all of them said, yeah, I mean, this is how the Turkish people voted. Even the CHP, after the first round, they came out and said, yes, there was some fraud and there was some pressure, but not enough to change the results. Like we accept the results and we just didn't communicate the message well enough to the Turkish people. All of which is to say, worst case scenario is off the table. So now it's really a question of, okay, well, how much is Turkey going to normalize economic policy? Is he going to raise interest rates? Is he going to keep cutting interest rates? Is all of this dog and pony show about the responsible cabinet officials that they're going to put into the cabinet, is that actually going to pan out? That's a very, very different conversation than we were having 3-6 months ago when we decided to sit on the sidelines and say, there's a little bit too much risk here. And again, that's not what's going to get coverage. What's going to get coverage in Western media is Erdogan is crazy. He's attacking Turkish democracy. He thinks crazy things about economics. I think Turkey is one of the only countries in the world where the only thing that people talk about is interest rates. It's just I get that interest rates are really important, but there's also more to an economy than interest rates, especially one as complex as Turkey. I'd be the first to tell you that Turkey has some really worrying indicators. I don't like the current account deficit at all. I don't like that foreign reserves are into negative territory. I don't like that Turkey is so dependent on imports of food and energy. So if you got another bump in commodity prices as the lira devalues more on the election news, all of those things are very worrying and they have to be part of the model. But that's a big difference from where is Turkey going to cannibalize itself in a disputed election versus now we're arguing about the finer points of fiscal and monetary policy. And beneath the hood, Turkey is a really interesting economy. They're a modern manufacturing powerhouse in a region that doesn't have any of them, astride some of the most important geography in the world. All of those things are good geopolitical fundamentals. And I wouldn't put it past the Turkish government to screw them all up. Argentina is the shining example of how you can screw up really good geography. But you'd have to screw up on the order of Argentina if you were Turkey to really make things go badly. And I just don't think that that's going to be the case. I think we're actually going to get some clarity and some confidence about the future here. And that should mean good things for a country like Turkey.
The thing that's interesting about Turkey too is, again, getting to what does the data show versus what does everyone talk about. Turkey's done great. You would assume that we're here talking about some this really beaten up country. Do we come in and try to scoop it up at the bottom? Things are going to turn around and start getting better. Turkey's done great. Turkey's GDP growth has been remarkably consistent over the last several decades. Turkey is, I believe, one of two countries to actually grow in 2020 in the world, which is pretty extraordinary. The COVID year, I mean. My point being that we're not speculating. We're not speculating that, things are, if only you look at it through this prism or this light, then things are good. All you have to do is look at the data, and it shows Turkey has been steadily marching upward in terms of closing the gap on per capita income, per capita GDP, however you want to measure it, with the developed countries of the West. And that's a much easier narrative to analyze and buy than Argentina, which is a disaster. And you're hoping that they turn it around. I think that's a big difference.
It is. And it also, it really cuts to the point of, we talk about deglobalization and multipolarity a lot on this podcast. They have become buzzwords in general. I hear people using these words now, and I'm sort of to the point where do I need to come up with new words? Do I need to think about my next big concept? Because I always want to be contrarian, but I don't. I think that's the environment that we're in. And the thing is, I think everybody's used to the last 30 years. Even though everybody's talking and using these buzzwords, people are still analyzing global economies and other countries in the sort of mindset, in the mental map of the globalization era, where the United States was the most important, and what the IMF says and what the World Bank says is actually what's going to determine things. And Indonesia is a great example of this. I was doing a project, I guess it was years ago now, with a company that I can't mention, but Indonesia was one of the countries that I was looking at there. And I was very, very pessimistic about Indonesia at first. And one of the reasons was, and you can do this yourself, listeners, if you're having trouble sleeping, go download every IMF or World Bank report on Indonesia from about 2010 to 2019. And you will find in those reports just so much shade. Indonesia's terrible. It doesn't have good foreign direct investment. It's corrupt. It's been, not performing relative to other countries in the region. And all of that was true, but it was true because Indonesia was really forward thinking. They were talking about vertically integrating supply chains. So a really good example of this is that Indonesia has a lot of nickel. And somewhere, I think it was around 2013, 2014, Indonesia decided to ban the export of nickel ore. And everybody, IMF, world, everybody's, oh my God, how can you do that? It's going to be terrible for the Indonesian economy. You've lost so much foreign direct investment. And what happened was Indonesia said, look, you can have the nickel. It's just if you're going to use nickel, we want you to refine it and process it here. And if you're going to use it in batteries, we want the battery factories to be here as well. And what has happened since 2013? China, which needs nickel and needs batteries for this EV boom that they're having, China's gone in and invested billions of dollars in Indonesia, building factories and helping Indonesia ascend the value chain. So suddenly things that 10 years ago, even pre-pandemic, were sort of seen as stupid or protectionist or out there, Indonesia was ahead of the curve. And now if you're looking at Indonesia, they've done this in a couple of different industries. They still have tons of problems. I'll be the first. We can talk about all the problems if you want. But now if you compare them to a country like Malaysia, where trade as a percentage of GDP is like over 130%, suddenly Indonesia looks like the forward-thinking country. And suddenly you've got countries like the Philippines saying, well, we want to do the Indonesia model of economic growth. And that's a huge change. And that's why I say, even me, who was bearish on Indonesia up until kind of 6 to 8 months ago, if you really start applying those macro insights that you have and you say, well, which are the countries that are actually preparing for this multipolar world? Indonesia is one of them, and Indonesia is starting to put the pieces together. I'm not an expert in Indonesia. I know that I need to learn a lot more about Indonesia over time. But this is another country. I mean, it's 200 plus million people. One of the first podcasts I ever did was with an Australian defense expert, and we were talking about his book on the podcast. Rory Metcalf was his name. You can go back and look at the episode, listeners, if you want. And at the end of we got to an hour, and I hadn't addressed his Indonesia chapter yet, but I didn't want to bore the listeners with more than an hour, so I stopped the recording. And as soon as we stopped the recording, he said to me off the mic, he was like, "You didn't ask me about Indonesia. This is the most important country in the region." That's from an Australian perspective because, they have sort of more awareness of it. And I was like, you're right. That was a really big mistake for me. And I mean, when was the last time that anybody listening to this read something about Indonesia? I know the New York Times had a big piece about their new capital, another human interest story there a couple of weeks ago. But in general, when was the last time you thought about Indonesia or checked your investment portfolio to see that you have some exposure to a gargantuan opportunity that's brewing there in the South China Sea? So I guess I'm just pontificating as well alongside you, just to say that I think that people are when you're looking at countries like Turkey and Indonesia, if you're applying old 1990s, early 2000s yardsticks, you're not going to recognize it as an opportunity. It's only if you start thinking about, well, what is the yardstick going to look like? What is the IMF going to say is good in 2030? That's what we're looking for with Indonesia and Turkey.
I think at the same time, it's important to remember that economics is always wrong. Economics is not a science. No, I'm serious. It is always wrong. And if you go historically and look at what was considered conventional wisdom in the 1980s and the 1950s, it changes all the time. I mean, it used to be that, in the 40s and 50s and 60s, that when countries like Brazil or Turkey were doing import substituting industrialization, ISI, that was wow, what a great idea. That was viewed as the thing to do. And then within 2 decades, that was viewed as, how could they be so stupid? Why didn't they just liberalize and embrace global trade and globalization and, the US century and blah, 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 blah. The conventional wisdom always changes, and things are much more about fashions than anyone likes to believe, because I think people like to think that economics is this science. They don't know. They don't know what works. You have to look and see, Indonesia in front of your face. Yeah, they're having success with this strategy. And I think that's a recurring source of opportunities, because if you read The Economist magazine, they have one kind of way of looking at the world, and it's, okay, we're going to apply that yardstick to this country and Brazil and Turkey and Indonesia. And I'll tell you, all three of those countries, The Economist magazine would crap all over if they did a cover story on them today, because of exactly those reasons that you point out. So I think just being aware of how flimsy the ideology is behind a lot of these opinions and media stories is a really important thing to keep in mind.
This is true of a lot of disciplines. I have an immense amount of respect for science and for hard sciences in general. If I could go back and redo my Cornell degree, I'd probably get a degree in hard science. At some part, I mean, I can't. I mean, I appreciate my liberal arts degree, and I think I made good use of it. But in general, I think the hard sciences is where you can do that sort of thing. But you're right, economics, political science, even geopolitics, they are trying to be hard sciences when they're not. When I go back and read political science papers from, say, the 1920s and 1930s, even 1950s and 1960s, they're so much more valuable than political science papers that get produced today, which are mostly just statistics papers with a little bit of political verbiage sprinkled on top of it. In that same way, trying to make political science a hard discipline like biology when it's not. Economics, the same thing. People do that with geopolitics too. I've had years where I hated using the word geopolitics because there are thinkers out there that try to treat geopolitics like a science. And I still remember Roger Baker, who's been on this podcast, who was the analyst who trained me at Stratfor way back in the day. I sort of laughed at him when he told me this, but in my first months as an intern at Stratfor, he said, geopolitics is a lot more like pottery than it is like science. And he came from a hard science background, but he was talking about how it's really about, when you're creating this analytical model, think about you're creating a piece of pottery. It's going to have weird edges. You're going to have mistakes. It might break if you throw it on the floor. You might have to rethrow the clay if something goes wrong. Something might go wrong in the kiln. It's actually trying to combine your knowledge of what's going on in the world, which is always going to be imperfect. And then can you create some kind of model that tells you what's actually going on? And there's a lot of fear of qualitative analysis these days. And again, you can even hear it in my voice that I'm feeling like I have to defend qualitative analysis there. I'm not saying ignore quantitative data. I'm just saying if you don't have a picture of where you're going, a model that can actually be falsified with real world things, you're just relying on the data and the economics, you're not actually going to generate any insights. And I think that's it happens all the time. It's actually very common in investments when you're thinking, because you're just looking at performance relative to the market and this EBITDA and this profit loss margin. But when you're thinking about geopolitics and trying to think about countries, like you said, you really do have to say, okay, like we're going to pull the lever on on Indonesia. Yes. Do you feel good having 7-8% of Indonesia in your portfolio now that your money is at risk? And like you have to look at yourself and say, like, you're not going to go crunch the numbers and be like, yes, according to my economics and political science data, I have decided this is okay. It really does come down to more of a qualitative call. So it's a constant battle internally, but I think it's some of the hardest things to do as an analyst today, because we have the amazing things that hard science has produced. We have this bias towards, if you have data, people like to see the data. And yet, like a lot of these things that we're talking about, there's no data to tell you that Brazilian culture is changing and that Brazil is going to realize the potential it's had for 120, 140 years, unless you've actually done the work to think about it. There's no coefficient or like variable that you're going to look at that's going to tell you that that's what's happening.
I like to think that what we do is the best combination of hard and qualitative that you can find, because it's all qualitative, essentially, like you described. Like there's no way to build some quantitative model of Brazil. And if you did, it would be wrong immediately and you'd have to throw it out. But at the end of the day, What we do is a hard science, because it's a binary number. At the end of the month, at the end of the week, did you make money? Oh, then you were right. And did you lose your clients' money? Then you were wrong. And that sounds, people don't like that. It sounds piratical and mercenary and low, but it's true. And it's wonderfully clarifying, because it gives you the freedom to be qualitative. Because ultimately you have a pragmatic outcome that you're trying to achieve, and you need to pick up and throw away theses, just like the Turkey example you gave, right? When you came to me that day and you had, here's my view of Turkey, and Erdogan is doing this, and it's going to be this, and I said to you, well, that's really nice, but like, I don't see that. Like the market is not telling us a bad story about Turkey. It's telling us a good story about Turkey. And that ultimately proved to be very, very correct, which isn't always the case. But in that case, it was. And in that case, I said, well, what is another potential explanation for what we're seeing? And then I remember you went back and said, well, here's another way to look at it, another slice of the pie, another prism to look at Turkey. And we said, okay, well, that seems convincing. Let's go with that one because that seems to be explaining what the market's actually doing. And that turned out to be correct. I find that wonderfully clarifying.
Well, I mean, you and I can find it wonderfully clarifying. My wife, Megan, I doubt she's listening to this, but cheers, sweetheart, if you are. Sometimes she finds it maddening to talk to me because this is also how, like, this doesn't just stop. Like, I don't just work this way and then I go and live my life normally. Like, in conversation, I will almost always take the contrarian point of view, or I'll just be sort of poking around and trying. And sometimes I don't even know whether I actually know, like, think what I'm saying, or whether I'm just like playing with the ideas. And I sometimes have to say, like, "Hey, sorry, I was just thinking about that from all angles." It can be difficult sometimes, and I'm sure you have that experience too. I thought we'd close out. We still have one more category of countries here, which is kind of the peripheral countries. And I had Mexico, Ireland, and Poland in the list, but why don't you pick? It can be those, or pick from another grab bag to talk about the peripheral countries, because in some ways these are the most fun and the most interesting, because everybody has views. I think, well, not everybody. I think people. It's more common for people to have views on a place like Brazil or India or Indonesia. It's much less common to have somebody come to you and be like, "Hey, have you looked at Polish equities lately?" That's when you really start to get into nerdland. So.
I don't know. Why don't we do Poland then? Because we talked about Ireland last week, and Poland is a very interesting place.
It is, and this gets back to, being able to say this very succinctly. And I've only been able to say this succinctly to myself for the last couple of weeks, even though I've been looking at Poland, intensely ever since Russia invaded Ukraine. But it really comes down to two different things. It comes down to Poland is going to be the benefactor of a huge demographic dividend. So millions of Ukrainian refugees, the majority of which are women and children who don't want to go back to Ukraine at all. They're telling every single poll that's out there that they want to stay in Poland in the long term. Poland has gone from having some of the worst demographics in the EU to some of the best overnight, because now they have all of these young, highly motivated Ukrainian refugees who there's enough linguistic and cultural synergy there that they're going to be able to integrate them into society. And suddenly Poland is looking like, its demographics are going to look better than everywhere else in Europe if this trend continues to hold. So you've got the demographic dividend there on one level. And then on the other level, Ukraine is doing well in the war so far. We had Sim on recently. Cousin Marco's coming on Monday. He's actually going to take the opposite point of view. He's been a little more pessimistic about Ukraine. But where I am right now is it's looking more and more like Ukraine is in a stronger position than Russia, and that Russia's under pressure, and that Ukraine at minimum is going to be strong and independent in the territories that it currently has. And I think they have a good shot at taking back significant territory from Russia as well. And if Ukraine is going to be strong and Ukraine is going to eventually be integrated into the Western economic order, Poland has the front row seat, because it's Polish companies that are going to rebuild Ukrainian cities. They are the ones with the political connections, the cultural connections. Like, Poland is going to have all of those different advantages. So you've got a demographic dividend, you've got a war dividend, and then last but not least, it hits with our EU peripheral thesis, which is that if the EU is going to become stronger and more coherent over time, you're going to have to make all of the countries on the periphery as wealthy and as successful as Germany and France. And Germany and France, their futures as great powers is built on, well, how strong and how wealthy can they make countries like Poland and like Portugal. I'm sure did you know, like 5% of our listeners in Germany, I'm sure all of them just collectively self-immolated when I said that. But too bad. You're going to have to get used to it if you don't sort of pick up the slack for these countries that you've been railing about for their fiscal profligacy for decades. Like, you're going to screw yourself. So I think you're going to come around. So for those are the big reasons. It's demographics, it's Ukraine is doing well, and then the EU peripheral thesis. And Poland is, you could maybe say Romania, although Romania is sort of tougher to access. Poland is the developed market, the open market, where they have a front row seat for those dynamics, and they should do well if those three things continue to proceed as they are now.
And just to give a view of how we actually implement that. So here's a thesis, a positive geopolitical thesis on Poland, changing the assumptions, evaluating the course of the war. So the conversation today basically went, okay, we have this thesis. What is Mr. Market telling us? Our evaluation of the Polish, market action is, it's okay. Like, it's not a screaming breakout buy, but it's not breaking down either. So we have previously we had no weight in Poland. We were not, approving investments there, and we put the sort of medium weight on Poland. And if the market action changes or something develops, then we'll increase that weight. And what that means is for smaller clients that we would be buying the Poland DTF for their accounts in the international part of the strategic wealth. And for larger clients who are doing the CI innovation strategy, then it's game on for those names within Poland. We would want to make that a larger part of their portfolio, those individual companies in Poland that we think are on the right side of history, so to speak, from a technology revolution standpoint and a innovation and competitive change standpoint. So that's how the sausage gets made.
Yeah, I forget what is Polish sausage. I forget what they. Yeah, right. That's what it was. I'm glad we could throw in a stereotypical food metaphor there. I didn't want to go to pierogies because I felt like that was too overwrought. Well, I think that's maybe enough pontificating. Is there anything else you want to hit, Rob, before we say goodbye to the listeners this week?
No, I think that's pretty much it. I guess what I would leave on is we had someone message us and they were saying that they liked the podcast or whatever. And I found this really striking because they said, it was only when I discovered or realized that you guys are actually implementing this stuff that I had a newfound, like a great respect and a fascination with what you're doing. And I think at the end of the day, like, we're not a media company. We're not here to just say shit to entertain you. We're just talking through how we're wrestling at these issues, and we're going to be wrong and have to change it sometimes. But I guess, pragmatism and sort of humility is the word of the day. And that's what makes our conversations different from everyone else, because there's always that number saying you're right or you're wrong for us, if not for the others.
It's funny you say that about humility, because you're right. We're not here to entertain the listeners, but thousands of you are entertained, and we're glad to have you. But the reason this podcast exists is because I was entertaining myself. So welcome to the podcast that I wanted to create, because nobody else was doing it. So I thought, what the hell, I'll do it anyway. Which is, by the way, I never listened to this podcast after the fact. I can't stand to listen to the sound of my voice afterwards, but the act of doing it is entertaining for me. So we're glad you're all along for the ride. And yeah, I guess we'll see you next week. Sound good, Rob?
Sounds good.
Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.